JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 5th of March 2020. So yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, also just before we jump in, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there. Now then, let's jump into the charts. Now the first one I wanted to touch on here is the Footsie 100. Now I haven't looked at this one for quite a while, but let's have a look at what's happening here. Now basically the index is rebounding this week. So after a strong sell-off that we saw last week, this week is slightly better here, slightly more on the positive side. But as you can see, yesterday the index managed to reach one of our resistance levels here, at around 6,858 zone, which it tested perfectly and kind of retraced back down. So around here, it also tested the 21 EMA on the 4-hour chart. So in a way, kind of all this provided very good resistance. The big question here is, can this travel higher? Now, the way we're going to look at this, of course, the way we're going to keep an eye on this one is from the technical side. If we get a nice good push above this 68.58 level, then yes, we will aim for higher levels, and initially we'll target this psychological 7,000 territory here, which is not far from the lowest point of October 2019. But of course, then slightly above that, we do have another good potential area of resistance, and that's basically the high of the 26th of February and around the 7,045 zone, roughly around there. Now again guys, for now, long story short, we need to see a nice good push above the above this barrier here, the 6,858 zone, before considering higher levels. In a way, also keep your eyes on at least on the 4-hour candle today, because if we see the 4-hour candle staying above this barrier, then yep, there could be a chance to see a bit more retracement here to the upside. The cash index is currently balancing around the 6,823 territory, so basically above yesterday's close, but still below this 6,858 zone. So keep your eyes on that one. Also just wanted to quickly show you, of course, don't get me wrong, I don't want to confuse you here guys, but we can also keep an eye on the Fibonacci extension, because you can see that currently, well, this is where the price found resistance, and it found resistance near this 38.2% retracement on the Fibonacci. So in a way, if we get a push above this opens the path towards the 50 zone, and then yep, we could travel further north. But again, for now, let's not overcomplicate things. First, let's see how if it can actually push above this 6,858 zone. If it cannot, then well, I mean, this is where we could start looking at some lower levels, and of course we do have this area here of support, which is the low of the 28th of January 2019, and a drop below this could of course lead towards some lower areas here, maybe towards these recent lows or the lows of last week, I would say. But again, for now, we are very careful, and because like I said, we may go for a bit more correction here to the upside, especially if it climbs above the 6,858 zone. WTI oil, now very quickly on this. So basically, overall, yes, it continues to trade below this downside resistance line taken from the high of the 7th of January, or in other words, the highest point of January. But at the same time, you can see that after the commodity found some support, and actually, let me just jump into a daily chart in this one. So after the commodity found support not far from the low of the 2nd of January 2019, or in other words, the lowest point of 2019, after it kind of found support here, it did overshoot it a little bit, but as you can see, never didn't kind of close below it. So in a way, from here, the commodity rebounded and drifted, at least tried to drift higher. For now, yes, we could see maybe a bit more upside here. We could see this one maybe climbing a little bit higher, but let's not forget that, yes, overall the overall trend is still to the downside. So if this downside line holds, well, we could see another round of selling here, guys. So that's why the bulls should not get their hopes up yet. Yes, we could maybe capture a bit of an upside here, but if this downside line continues to hold, then yep, keep your eyes on that one. Of course, keep your eyes also today on the OPEC meeting. So something that might drive the price of oil. So but again, let's keep an eye on that. Let's keep an eye on the results coming out from there. All in terms of the upside from the technical side here, of course, if it makes a push above the 50.87 zone here, then we could consider higher levels, because at the same time this would also break this downside line, and yep, we could see further a further move to the upside. So basically, if I draw an arrow like this, that's the scenario that we're going to be keeping in mind. Jumping into Bitcoin now very quickly. I haven't looked at this one for quite a while now, and basically here, as you can see, the after kind of it tried to make its way higher here, after it actually overcame the psychological 10,000 zone, it quickly kind of drifted back down. So actually, let me just get rid of some of these lines here, and probably I'll just jump into a 4-hour chart. It will be much easier. So this is no longer valid. We had this upside line, which is no longer valid as well. What's more interesting right now is the fact that it found support near this 8,400 zone. And by the way, I'm looking at Coinbase Exchange here. So it found support around this 8,400 zone. It didn't quite reach the low of the 24th of January here, which was around the 8,216.15 zone. It found support near this 8,400, as I said. But the main question right now is, can this move back up? Of course, we are at a very critical spot here from the very short-term perspective. Of course, in a way, this area here, the 8,973 mark, if we get a push above this, then yep, this would confirm a forthcoming high, and more buyers could be joining in here. The only thing is here, guys, to keep an eye on, and that's the downside resistance line. Now let me just quickly draw this one here. Now we do have a few tentative ones, but nevertheless we'll keep an eye on them. So the first one is this one, which is taken from the high of the 13th of February, and the other one is taken from the high of the 19th of February, which is could be a little bit closer if the crypto decides to travel further north. Now again, if we do get a push above this 8,973, yes, we will aim for slightly higher levels, but let's not forget that we do have these downside lines, which could in a way keep the price lower. For us to, let's say, consider maybe the downside here, well, ideally, of course, we would like to see a drop below this 8,400 zone, and then in addition to that, we would like to see a drop below the 8,216.15 territory, which is the low of the 24th of January. Now, if we do see all these moves, then yes, of course, this is where it could become a little bit more interesting for these sellers, and could see a deeper move to the downside. For now, we are examining the upside from the near-term perspective, but we'll keep an eye on these downside lines. We'll see how it performs around there. Now then, AUDCAD. Of course, AUDCAD popped higher. Yesterday we had another a cut from the Bank of Canada, so interest rate cut, and that led to a bit of depreciation in the Canadian dollar, I would say. So of course the big question here is which of these is going to outweigh which. I mean, in this particular scenario, AUDCAD. Now as you can see, the pair kind of was still trading below this downside resistance line taken from the high of the 31st of December, and today we're seeing a nice push above it. We're seeing a push above the 200 EMA here on the 4-hour chart. So basically a lot of positivity so far, but again, don't get me wrong, that we have a full day to go through. So yep, keep your eyes on that. And of course, for now, what you could do here from the technical side, keep your eyes on this 0.8880 territory, so roughly around here. In order to consider slightly higher levels, we would like to see a nice good close, at least of a 4-hour candle above this barrier, and then we could start aiming for higher levels, like for example this one right here, the high of the 12th of February, or we could aim for the highest point of February, and that's around the 0.89 89.95 zone. So again, some good potential areas here, but first, the more important area to consider, of course, is this barrier right here around the 0.8880 zone. So keep your eyes on that one. Let me just quickly highlight that for our future reference, and yep, we'll keep that in mind. In terms of the downside, now here, of course, some of these levels got violated. We had them previously here on the chart. Nope, not like this. Like this. There we go. So, but in order to get a little bit more excited about the downside, of course, we would like to see a push back below this downside line, and ideally we would prefer to see a drop below the 0.8794-95 zone right here, because this way it could open the path towards lower levels again, because all this territory right here in between this level here, the 0.8794, and the downside line could be somewhat of a neutral one for us. So that's why we would like to see a drop below this level here first in order to consider the downside. But for now, it's leaning more towards the upside, but let's see if it can actually make its way higher. GBPCAD, very quickly on this. Now again, also as like the other Canadian pairs here, GBPCAD accelerated to the upside, of course, mainly on the weakening of the Canadian dollar, but overall I just wanted to show you that here this pair is somewhat of a mess here, a little bit, I would say. I mean, it's a little bit trendless, and it continues to kind of oscillate around its 200 EMA here on the 4-hour chart. You can see that all of the other EMAs as well are also kind of don't have a huge amplitude here. So in a way, for now, how we could look at this is, of course, it's trading above this key area of support around the 1.6917 zone, which is the low of the 13th of January, or in other words, the lowest point of January, and it's also trading above this the high of the 31st of January, which is around the remove the line, there we go. So and it's trading above this 1.7481 zone, which is the high of the 31st of December, or should I say, actually, sorry, January. I do apologize. But at the moment here, what we can do here is try to capture some short swings here, maybe, because for now, as long as it remains between these two levels, we're gonna kind of overall we're going to stay neutral, but if for example today, if we get a push above the high of yesterday, which is around the 1.7255 zone, then yes, we could start aiming for higher levels. Ideal scenario here is a touch of this 1.7377 zone, marked by the high of the 28th of February, and then from there we'll take it well, we'll take it from there. But again, if we do get a nice strong move above the 1.7255, then yes, the next level to consider is this high around the 28th, the high of the 28th of February, around the 1.7377. If we do see a test of this, we'll pick up on this one again, because we don't want to really kind of go travel all the way here towards the highest point of January. Is that correct? The highest point of January, that is correct. So yep, these 1.7481, we don't really want to travel all the way there. For now, let's keep it short and simple, and we'll aim for the 1.7377 zone if we get a nice strong move above the 1.7255 zone. In terms of the downside, now here again, also we can consider the short-term scenario, and if we see a drop below the 1.7175 zone here, then yes, we could aim for lower levels. We will aim for this low, the low of yesterday, around the 1.7045 zone, but if that fails to withhold, then yep, all the way we could start aiming all the way here towards the current lowest point of March, around the 1.6969 level. So good potential target. But for now, guys, everything's kind of leaning more towards the upside, a little bit more upside. But we need to see a nice good break above this. USDJPY, very quickly on this. So not much has changed since last time I've looked at this one. Still overall below this downside resistance line taken from the high of the 20th of February. It did make an attempt yesterday to move higher, but failed to do so, and you can see that it drifted back down below this, and this is, by the way, the lowest point of February, the 107.48. although we had some overshoots here, but as you can see, this area here, the lowest point of February, kind of continues to act now as a good area of resistance. We will of course aim for lower levels, but the only problem here is because we already are quite extended here to the downside, in order for us to aim for further declines, we would like to see a drop below the recent low here, the current lowest point of March, around the 106.82 zone, because then this would confirm a forthcoming lower low, and yep, more sellers could be joining in. In terms of the upside, we would like to see a push, ideally we would like to see a push above this 108.58 zone, and only then target the upside. For now, it seems that the upside could be slightly off the table unless it's a temporary correction. And finally, Eurodollar. Now, I looked at this one yesterday in my trader. Well, actually, I keep looking at this one in every video of mine, but nevertheless, it continues to work out perfectly. So yesterday, what I've mentioned, guys, was that if this area here continues to hold the 1.1095, then yep, we could see another round of buying. So where we could see a nice rebound and a push back to the upside. For those who are more on the cautious side, you could just wait for a push above the 1.1185 zone here, and then start aiming for higher areas. For now, some might say that maybe it's actually forming somewhat of a flag here, maybe better visible on the daily chart. But again, it's too early to say that for now, because in a way it could also travel lower. It could drop below the 1.1095. Aim for this upside support line and then rebound from here and then move to the upside again. But for now, guys, let's see how this is going to play out. If we see a drop below the 1.1095, then well, aim for this upside support line taken from the low of the 20th of February. In terms of the upside, for now, still we are more positive than negative, but in a way, for those who are more on the cautious side, a push above the 1.1185 could do the trick here, and ideally if we get a nice day, at least a 4-hour candle close above this 1.1185, and then yep, we could consider that 1.1238 zone. Okay, guys, I really hope you found it useful. Thank you very much for watching and listening. I'll have to wrap it up here. If you want to join me later on at my trader's tea time, as always, 14:15 GMT, we'll have a look at some of these instruments, some new ones as well, and yep, we'll see what the market has to offer us then. For now, I hope you have a wonderful trading day, and I'll see you later. Bye bye.